Stocks are mixed this afternoon, but we are up 72% since the 12-year low last March. To analyze the levels of the market, we're joined by our good friend Ann Bartels. She is Managing Director and Head of Technical and Market Analysis at Bank of America Merrill Lynch, where she joins us from. Marian, great to have you back on Street Smart. Good afternoon.
Good afternoon. Thanks for having me back, Carol.
You know, Marian, I've been thinking about you a lot because as we keep going through that 1150 level over the last few days, I mean, how significant is it that we've closed above 1150 and gone, what, 10 or so points above it?
Oh, it's significant. What the market really, I think, is trying to do is we formed a head and shoulders bottom between October of 08 and July of last year, and that measures up to 1220 to 1230. And I think that's where the market wants to go. As you mentioned, you know, transports have had a great move, and now we're starting to see the high-quality companies that have been lagging now break out of significant bases. So the path of least resistance, at least right now, is to the upside.
That transports, I gotta dwell on it a little bit, Marian. I think we've got a chart for our viewers, but I mean, we're up every day since March 9th, longest streak since 1993. I mean, that's a pretty significant trend.
And it's significant. It was the first one to break out. It's been a leading indicator. We're getting the Dow to follow. What we're also watching, which we said was important to a sustainable breakout to the market, was a move in financials. We're getting leadership out of the regional banks and the BKX Bank Index, but now we got the S&P financials breaking out. What's still lagging within that component, which still we're watching very closely, are the broker-dealers or capital markets. Those stocks really have basically been range bound since the summer, fall of last year. So they really haven't participated yet. So that's something to watch. So
watch those banks, watch the regional banks too in particular?
Well, the regional banks are doing extremely well. They've actually been leading. What we're seeing, though, is a lot of short covering within the financials. The sector really still has record short positions. So we're getting the regionals to lead. Where we're not getting the leadership from are the traditional broker-dealer capital market stocks.
And Marian, with the financials, those bigger guys still, what? I think you note that they're, what, about 60% of the overall market. So it is significant for them to have a big move to really provide some underlying support to the overall market.
That's correct, Carol, it is.
What about volume? I want to go back to the S&P 500, Marian, because, you know, we have a lot of folks who come on, the traders, who say, yeah, we broke through 1150, but it was on kind of, you know, not amazing volume. What do you think about the volume trends?
I can't argue against that. The volume is light, but what we do is we break out up volume versus down volume. We call it accumulation and distribution. That's very supportive of the move. We're getting very strong percentage of up volume versus down volume, and our down volume hit a new low. So there's not a lot of sellers in this market. So the key is, as long as the sellers stay away from the market, the path of least resistance is going to be higher.
All right, what about the put call? You're also watching the put call ratio. What is that telling you?
Yeah, we look at the 5-day moving average, and we're not at a level yet where we see enough complacency. We're also watching the percentage correction between the bull bear and then percentage correction, and there's still too many people within the market looking for a correction. You're going to hear many talk about the indicators being overbought, and they are overbought, but they're not giving us negative divergence readings. What that means is the markets have to move to new recovery highs, and they have to roll over, and we haven't seen that yet. So the indicators are still moving up. So that as we're pointing to, we think the markets on the S&P can go to 1220 to 1230.
All right, 52 new week highs too, Marian. Another thing that you've been kind of keeping a watch on. Tell me why.
Well, we want confirmation of the move and the breakout, and we got that yesterday. You know, breadth has really been the key indicator leading the markets. Breadth broke out quite a while ago, before even the S&P and the Dow and NASDAQ were able to break out. So all the indicators are basically in line, and I understand the comment about volume, but what we think market participants need to do is break out that up volume and down volume, and you'll see that there's really no sellers in the market, and there's more strong up volume.
Marian, I know you focus on the technicals. I always throw you, though, some fundamental questions as well, particularly because we're coming off that Fed meeting. We didn't get much from the Fed, you know, much that was different from the Fed this week, but there are more people saying that, you know, we're going to start to see the Fed eventually raise rates, and that will impact the market. Let me tell you, when you look at the fundamentals out there, does it make sense? Does it match up with what you're seeing on the technical side? Are technical support for the market right now?
Yeah, the technicians have always paid attention to the Fed and whether or not they're adding liquidity, draining liquidity. As long as the Fed is relatively accommodative, money finds its way into equities. If anything, I fought that battle, and when I went back to look where, why the market continues to go up, and I think we can point to the Fed still having relatively accommodative policies.
Hey, got about 30 seconds left here. One group I want to bring to your attention, that's energy. You like energy, but you point out it's one of the most oversold right now. What do you think's going on here?
Well, the energy stocks are acting as if they want crude oil to break above 85. So until we can get a bigger move in crude oil, it looks like the sector will lag, but longer term, it's part of the commodity complex we continue to like.
All right, we got to run. Marianne, as always, we love when you break down the markets for us. Thank you so much.
Thank you.
Ann Bartels, everybody, over at Bank of America Merrill Lynch. All right.